for the moment, what's the market spoiling for? At the moment, Gautam Chhaochharia, Head of India Research at UBS Securities, joins in. Good morning, Gautam. Good to have you with us. Well, just a trader question now. How is the market poised at this juncture? Will it do a minor jig and move on to global cues? Or could this have a slightly more lasting impact?
Good morning, and I think this will be just a temporary today's phenomena, and we'll go back to global cues and possibly other cues around elections, etc., rather than focusing on just the fiscal number. So today will be at best a one day phenomena from the vote and account perspective.
Yeah, no, Gautam, if he was pushing too much, to monitor the subsidies, and a large part of the burden is pushed off to the next year. If something like that happens, and the market is spooked by that 4.7 number fiscal deficit that he reports, sees it as fudging or sees it as achieved very lamely, no lasting impact even then?
Not really, because it's may not be a surprise for the market as such. So it is a cash accounting based budget. There has been a lot of the spending which has been pushed to next year. So that's fairly well known as far as I think talking to investors. So the extent of it, what numbers they show, obviously that will play a marginal role. But again, we're talking about mid-Feb, and the numbers are for March end.
Okay. Gautam, hi, good morning. Yeah, a lot of people who've joined us this morning say that this is going to be a one-day affair, this vote on account. So let's move on a little bit. The global cues have become a little supportive in the last couple of days. Do you think that our markets are now going to be moving higher in tandem with the global momentum?
It's obviously for into the elections, global cues will play a big role for Indian market direction. And if we see global markets strengthening, that Indian markets will also react positively. But that, the big directional move will happen likely only post-elections for India.
Gautam, good morning. What about the portfolio allocation? Because again, the market has become very bipolar. How would you approach the rest of the market in terms of your portfolio, your core portfolio? And would you look at stocks like cyclicals, or would you be still preferring stocks like IT and pharma?
So we still prefer IT, not just because of dollar mover as such, but bottom up there are fundamentals in place, and we also think that valuation also there's a long way for valuations to go up, specifically compared with the last cycle in 2010. So IT still we still like. Pharma from a top-down perspective we are neutral. Bottom up we still like names. In terms of cyclicals, it might be still too early. At least pre-elections, it might be still too early to make a big bet. And you have to take a 2-3 year perspective to bet in a big way on cyclicals, because you have to remember that when you're talking about investment cycle recovery, it takes a couple of years, maybe 3 years for any recovery to take shape. It does not happen overnight. And therefore, cyclicals at this stage is early. What we are doing or telling investors is at this stage, even if you want to position for that trade from a slightly medium-term perspective, maybe private banks and maybe select power defensive names would be better bets to do that.
Okay, Gautam, just a few tax expectations. There is this tax holiday given to power projects that was available only till March 2014. If that is not renewed, he doesn't really have the mandate to renew it. Will that react? As well, some of the surcharges, on domestic companies with taxable income over 10 crore, all that was increased supposedly for 1 year. Will the non-renewal of these make a difference to earnings or to markets?
I don't think so, because markets know that this is an interim budget. The new formal budget will be announced in June possibly, and that will be the real indicator of the direction of these tax measures. So, for example, if it does not roll over the surcharge, it does not mean the surcharge cannot be imposed by the new government when they come in. And similarly for the power side. The other side of the expectation which you hear from investors is on indirect taxes cuts. Those can happen even if they are there for 2-3 months, but ultimately markets know that this is an interim budget and vote on account, and the real direction in terms of tax policy will happen in June, so will not necessarily react in any major way to any of these proposals.
Do you see further easing of the gold import curves, and how would you approach some of these stocks like Titan, etc.?
Titan, we still have a sell. It's not just about gold, but also about the discretionary slowdown which we are seeing. and in conjunction that the valuations are still not cheap enough for us to get excited on the name. In terms of gold imports, you do get conflicting signals from the government. We don't have a formal view as such, but it seems a bit unlikely and premature at this stage for the government to go all out and relax gold imports, specifically given that the worry around tapering or the central bank action globally is still not behind us, and we continue to see worries around Turkey, Argentina, etc. coming to play through. So I think the government will not necessarily take that risk right now. It's not really a big political issue right now to relax gold imports, and therefore there's no immediate urgency to do that.
Gautam, do you expect him to say anything on subsidies and what that might mean for big sectors, especially oil and gas?
He might make a directional statement that we want to bring it down, subsidies as well as fiscal deficit, which he had said last budget also. So he might reiterate that.
So how are you going into stock positioning for the next 5 months till not even 5 months, 3 months till the election results are known? What are you heavy on at all, if anything?
So till the elections, it's a mix of either sectors where we are bottom-up positive, so includes IT, telecom, media, select names in oil and gas, as well as some positioning on the cyclical side in a more attractive risk-reward framework, so private banks and select power defensive names. So that's the areas which we are recommending investors to stay on. Still underweight consumption and definitely discretionary. Pharmaceuticals neutral. Automobiles, two-wheelers definitely underweight, and it has been an underweight and remains an underweight. Four-wheelers we are broadly positive, but it's more an individual stock call rather than overall sectoral allocation.
So Gautam, the market has opened up about 0.3%, but the stock to watch today is Bharti. It's up about 1.5%, and there's news that within the next couple of days it might complete that acquisition of Loop for about 700 crores. How are you approaching this trigger and the stock itself?
Yeah, so I won't be able to comment on the potential acquisition, but overall we still remain very bullish on the telecom space, and in fact we think the spectrum auction getting over is also a catalyst, because now the worries around both competition as well as tariff increases should be behind us. So we still remain, and it remains one of our key overweight from a strategy perspective.
Okay, by the way, a couple of more stocks that I wanted to point out. Jet Airways has opened 5.5% higher, so big gains over there, and Cox & Kings is up about 3%. Gautam, your call on a stock like Tata Motors now, after the kind of rally that we have seen post the numbers, do you think valuation-wise still got some more room to go?
Still a buy for us. We still like the stock. It's not one of the top 5-6 picks for India at these levels per se. And that's primarily because after the rally and where the valuations are right now, but still remain a buy, and we like the stock.